One of the issues with funds and investors in the UK is they're constantly just unicorn hunting.
Dominic McGregor.
Best known for co-founding Social Chain.
And now a founding partner of Fearless Adventures.
We only invest in profitable companies. If you think of some of the big businesses that have come out of the UK in the north, just take the fashion space as an example. You know, you've got Represent, you've got Gymshark, you've got Adanola. They've never raised an investment. They're all on track to clear 100 million revenue, and Gymshark did clear 100 million revenue. And those businesses exist, and I think they only exist outside London because you're not.
In 2020, 2021, at a time where everyone else is firmly on the unicorn hunting hype cycle, how did partners respond to them?
So majority of our LPs are entrepreneurs, so they get it. Instead of like the portfolio play of having one business to return the entire portfolio, like we could shift that towards like maybe 4 will make a return and we'll have 4 okay ones, and then maybe instead of having 9 losses, we'll have 1 loss.
How do you educate a young founder now to say, right, go and hunt down this revenue, make that start with your business?
It's the whole kind of idea of, you know.
And welcome to another episode of Big Risk Energy. And on today's show, I'm blessed to be joined by the one and only Dom McGregor. Dom, thanks so much for coming on the show.
No problem. Thank you for having me.
So Dom, if I was to meet you at a party, how would you introduce yourself right now?
I don't know if you'd meet me at a party. Don't think I'd be there. I'd say, hi, I'm Dom. Good music, I guess, playing right now, isn't it?
Nah, not the parties I go to. Terrible music usually. So I guess we got off to the wrong start. But no, Dom, it would be great for the audience to understand. Obviously, you know, you had such an amazing background with Social Chain, exiting in 2019, 2020, and then obviously building in the venture tooling ecosystem at a time where venture has gone through a very, very interesting ride of what I can only imagine was probably a very up 2020, 2021. And then obviously the fallout from there. And maybe that's actually a nice starting point, which is Social Chain. Obviously, such amazing right time, right place. You know, in terms of that advent of social virality, a new form of distribution of content where you guys were right there. And then on the venture side of things, obviously right there at the best time ever, and also probably right there at one of the worst times ever.
Yeah. I mean, look, I always say that, you know, timing plays a huge part in entrepreneurship. You know, if we were 2 years earlier with Social Chain and 2 years later, we wouldn't be relevant because that's the way the frontier works. So I kind of talk about these like frontiers of new technology or change of hardware, which kind of opens up opportunity for new businesses. So we were at the forefront of that frontier with social media at the right place at the right time. You know, think about, you know, the whole analogy of a wave crashing. You ride the wave, you know, and that wave grows every year, which means the market grows every year, which means as long as you're maintaining market share, your revenue's growing just by the nature of the growth of the market. So that was fantastic. You know, I remember walking into a FTSE listed company and telling them about this platform called Instagram and saying to them, you need to be on Instagram. And they like kind of laughed us out of the room a little bit. They were like, no, we're cool. We don't need to be. People are buying from us. And the phone rang 6 months later and they went, hey, Instagram, can we like talk again? And like, that's like the rate of change. Yeah. It went from literally like feeling like 1 year we were kind of like rolling a square, like stone up a hill, like trying to roll it. And then by like a year, 2 years later, the scone was in free fall down the hill. So, and that was just the market. Yeah. That wasn't anything we'd done particularly. It was about, you know, people opening up their eyes to the possibility of social media. And who did they want to trust with social media? They wanted to trust young people who knew about it. So the fact that we were like 21-year-olds and had 2 years experience in social media, we were experts. And there's not many sectors you can walk into after doing it for 2 years and be an expert. Imagine if I tried to go into the city and in finance and tried to say, hey, I'm an expert at finance, I'd get laughed out of the room.
I mean, that was pretty much what happened with Web3, right? So yeah, absolutely.
So that was like, these frontiers exist. So you have, you know, obviously the Web3 blockchain frontier. You're in that frontier of AI at the moment. These frontiers keep coming around. And I always say to people like, and this is where the investing hat comes in quite funny because the investors always kind of run to these frontiers. You know, you always have the investors who are looking at like, hey, the next big thing, how are we going to make 100x return, 200x return? And that's like one of the issues with funds and investors in the UK is like, they're constantly just unicorn hunting. Mm-hmm. And it's almost like they actually overlook a lot of good businesses because, you know, when the fundamental economics of a fund get bigger, actually you are less incentivized to actually support smaller businesses. Yeah. Because you've got to have a portfolio spread. Yeah. So if you've got you've got a £10 million fund, you can put 5 million into 10 bets, so 500k each. And then you have the next 5 million for follow-on investment. When you get to 100 million, you have 50 million for the business, so you have to write £5 million checks. So actually, it excludes you from investing in the really exciting stuff in the early stages. And what happens with a lot of fund managers is actually the way they can make more money is actually just by growing the fund. So you actually get the best fund managers who start maybe in the early stage going to growing bigger funds because people back them more. And actually then they're dealing with big businesses rather than small businesses. So it's a real weird ecosystem where not many people stay in one place and be the best at one place. And that's what I think we're trying to address is like, we're not going to grow like the ticket size. We want to continue to be the best at this. And the best example of this is Y Combinator. Yeah. Their model hasn't changed. They do the same thing over and over again. And I think that's what, and I'm not comparing us to them at all, but I think we're going to try and stay consistently at businesses which are, we want to be first investor in. That's kind of where we want to sit. We want to kind of see a business which has got traction and proof. And we want to take them on that kind of journey by helping them through navigating like the strains of running a business.
Yeah, fantastic. No, it's great to hear. And you're right. I think as with anything in life, the more dedicated we can remain to one skill set or one space, we become the experts in it. So I think that makes total sense. But an interesting question, and obviously this goes out to an audience of thousands of founders. So how do you build conviction in the early stage now versus how you're looking at it in 2020, 2021?
Yeah, I mean, look, 2021 was a wild time, yeah. Even before that, 2019, 2020, growth of e-com, growth of valuations, stimulus money in the economy.
Right.
I think some of the fundamentals have remained the same though. Firstly, you're investing in people and that doesn't change. Yeah. So you're investing in a founder and they're the same, their capability, their conviction, their salesmanship, they're all the same. So that hasn't changed. And then the fundamental at the early play is like, okay, is the market big enough? Is it exciting enough? So we look at that from that. And so for me, actually, the early stage stuff is easier still because you've got less data and you've got more hope and more future and more forecasts. So you're actually basing it on the same principles that you were basing it on in 2020, 2021. So, a lot of that is kind of growth opportunity. Do we believe the person can actually execute against that? So that hasn't changed. I think where the changes come is where, you start going to rounds, Series A, Series B, where you're like, okay, you've not reached the metrics. And so instead of people piling the money in to actually help them reach the metrics and having a seed extension round or a pre-Series A round or whatever, there's a lot more brutality in terms of actually, no, this isn't going to work.
Yeah.
And then you get the people run out of cash flow. You get people, having to make pivots and decisions. I know of one health tech business, call it diagnosis-based business, which they raised about 70 million, something around that. Probably spent like 20 of it. They've got 50 million in the bank. And they've sold off one of the successful parts of the business for a bit of a return for investors. But they've got 50 million now and they're going with a new idea.
Right. There you go.
They have to start from scratch again because actually the economics return of the idea that was initially invested in isn't going to make the investors money back. So they actually have got 50 million now basically to start again. The valuations which people invested on 4 years ago needs to be exponential. And what they've got at the moment is a good business. And they've actually ended up selling a really good business, which was profitable and doing well because of the economic returns of VC. And that was because of inflated valuation. So my kind of advice to founders, I always talk about it. I say, look, having a higher valuation or a raise doesn't necessarily make you successful. It means you've got a higher target rate of growth, which obviously, as you can kind of see from the markets at the moment, we're not experiencing it in loads of areas. There's obviously some outliers. You've got businesses like 11 Labs, which is, seem to be that next like really, really powerful one coming out of the UK. Beehive as well. So it's really good businesses which are there, but the standard like VC model doesn't apply to every single business now. It's not a case of hockey stick every single time, And I think what frustrates me about VC and about investing is that people aren't happy with a good return. So people aren't happy with like netting 50 million. They're going for unicorns. And I think unicorn hunting is very dangerous.
Yeah, especially in the UK, when we're not necessarily set up for it and don't necessarily have the internal market size to deliver unicorn returns as well. So, if you're unicorn hunting in the UK, you're also almost sort of saying, well, look, we need this to work internationally, which maybe you don't in the US.
Yeah. And you're also betting on the fact that no one else is doing this in another market.
Right.
Because you know your US competitor is going to have 3 times the capital you are.
Yeah.
If you raise say you raise a Series A at 20 million, that the US is going to get it at 30 million, they're going to go quicker than you, and they're going to have a marketing. So the speed in the UK of execution has to be so much better because the product side of things is commoditized a little bit. most people can build similar products if you give them enough time.
Yes, and I think the moat is getting lower and lower around pure technology because of all the automation out there and the way people can now accelerate their processes. One of the interesting things that I've seen, and just on a trend that you sort of mentioned there, which is whereas previously maybe a VC says, okay, I like these guys, they haven't hit their metrics yet, therefore I'm going to support them with a ticket to hit those metrics. And now it's like, okay, well, you haven't hit those metrics, therefore we're not gonna come in and help you get there. So I've seen a lot of founders who are sort of saying, well, look, okay, the VC funding isn't on the table. I've now had to go and hit those metrics myself. At this stage, VC now becomes much less attractive, right? Because once I've hit those metrics myself, once I've shown the ability to develop the unit economics, that I have a business that's growing at a good rate, that's profitable, with revenue-based financing, with all these things out there, actually VC loses its edge when you've got a good business.
And that's an incredible thing, because right. I think the issue was that there was always an assumption that you don't need to make profit, and if you make losses, VCs will fund your losses. I think you got a lot of like lapsdaisical founders not looking at the bottom line and trying to grow a business which was like hitting like growth at all costs, yeah. And rather than go, actually, let's lose my brain a little bit here. Can this become a sustainable business? And actually, that sustainability is coming first. It's not about going through Series A, Series B, Series C, Series D, and then becoming profitable. Actually, like you said there, okay, I've got to make this work. I've got X amount of cash. I've got to make. And then you suddenly realize this thing called profit exists.
Yeah,
you can make money, and that money actually gives you more options than being bestrangled to VC. So I think that change is massively positive, and it's something that we actually look at. So we only invest in profitable companies.
Oh, right. Okay. Interesting.
Fundamentally, only invest in profitable companies.
Wow. Okay. Does that mean you guys are really sector agnostic then and not just looking at...
Yeah.
Okay. Interesting.
You can define profitability in a lot of ways. Yeah. You can look at adjusted. You can look at unit economics level of profitability and say, look, if you strip out, we're not in a situation where, because of our check sizes and because of our structure, we're not in a situation, we can't go in and fund losses.
Yeah.
What we want to give is growth cap. I'd say we're probably kind of like a really early stage with like mini PE a little bit, playing in venture. And it's like, when we see businesses which have got that kind of, a lot of founders, be it 2, 3, 4, 5 men bands that get to a really good level of like 1-2 million revenue, cash isn't collecting how it should be because of, you've got to either buy stock or you're investing for the future, but you still like break even. Yeah. Those businesses exist, and I think for me, like what we're probably doing is taking those businesses which could become lifestyle businesses and actually giving the founder the possibility to build a business which sells one day.
Yeah, that's amazing. I think that's it's a really interesting point because you're right. There's all these natural plateau points for businesses, and you're right. If you can help them transition from that lifestyle plateau to a potential trade sale, PE sale at some point down the road, then that's fundamentally potentially life-changing for these individuals.
Yeah. And the great thing is now there's lifestyle tech businesses.
Yeah.
So like, maybe like 5 years ago, there wasn't lifestyle tech businesses. There was like, a lot of these lifestyle businesses would be maybe travel or consumer, but now you're seeing lifestyle tech businesses. And like, that is like really interesting because I'm seeing people, I know people very close to me as well, who are clearing $1 million revenue with tech side hustles. And it's like, I do 5 hours a week kind of vibe, maintain things. And I'm like, actually, let's package it up, create a brand, take it to, go and grow it. And then you're actually looking at, instead of, clearing your 200, 100K salary, whatever you've taken out of it, to actually have life-changing amounts where someone's going to buy this business for X, Y, Z.
Yeah.
I think that's a really, for us, like, we see, like, and this is probably a skew of, like, where we're based. Like, in the North, we see so many businesses like this. If you think of some of the big businesses that have come out of the UK, in the North, mainly in the fact, just take the fashion space as an example. You've got Represent, you've got Gymshark, you've got Adenola. They've never raised investment. Gymshark did to buy out one of the shareholders, but they never raised investment. They're all on track to clear 100 million revenue, and Gymshark did clear 100 million revenue before taking any money in.
Yeah.
And those businesses exist, and I think they only exist outside London because you're not swamped with people who are trying to get money first. They're trying to make sales first. They're not trying to raise money; they're trying to make sales, and that difference is like very, very clear.
Absolutely. So I'm fascinated. So this has been your thesis from when you guys started. So in 2020, 2021, when you're initially approaching LPs and saying, look, this is my thesis at a time where everyone else is firmly on the unicorn hunting hype cycle, how did partners respond to that when you're saying, well, actually, look, we're looking at a totally different end of the market when the market is just obsessed with the other part?
So majority of our LPs are entrepreneurs, so they get it. Yeah.
Yeah.
They all run businesses, they get it. So when we said to them, look, we're going to invest and we're going to help them, and we're not looking for unicorns, we're actually, instead of like the portfolio of player having one business return the entire portfolio, our thesis as well that we could shift that towards like maybe 4 will make a return and we'll have 4 okay ones, and then maybe instead of having 9 losses, we'll have 1 loss.
Yeah.
Again, going back to the profitability, a thesis that felt lower risk than like putting money into a lottery ticket.
Yeah.
And it might come back, it might not.
Yeah, fantastic.
The other side of it is like a lot of the entrepreneurs have that pot already. I know I did, so I was in a couple of funds. So I know I knew I had that, aggressive venture play. So I was like, okay, that's the spin money. Let's actually go and pitch something which feels a bit more sustainable.
Yeah, fantastic. It makes a ton of sense. And I can imagine if your LPs are successful entrepreneurs who appreciate the realities of building a business rather than looking at it on a balance sheet or a spreadsheet, makes total sense and would certainly see the appeal of that. And let me ask, I'd be remiss to not talk about, obviously you're a published author, you've gone through a really fascinating journey on that side of things. You've spoken at length about sobriety and your journey there. But actually, one thing which I'd love to dig into is actually talk to us about the process of getting a book published. Because it's something which I think a lot of people are interested in, a lot of entrepreneurs we see as they're trying to build brands. It's something which is not easy to do and something which I can imagine is a real time consuming process. So I'd love to understand the behind the scenes, the BTS of what's it like actually building out, writing, going through that process.
It feels like it's been like an 8-year process. Yeah, I feel like it's been along as I've not been drinking, it's been a process. Look, I think I've carved out a point of niche around that. And, I think I was probably one of the first people, especially in the male space, to talk about sobriety from a requirement rather from like a lifestyle choice. Yeah. Mm-hmm. And what that's led to is like, I think I've seen the wave of people who have seen it as a lifestyle choice now. And that for me is huge because it feels like, the whole point of like society and humanity is to progress society through painstaking previous generations' pain. If you think about where we've come from in terms of like tribalistic, tribe cavemen and that kind of stuff, they struggled for a better life for the future. So I feel like my struggle has helped people in the future realize actually this is a better option and a lifestyle choice. Look, I've been creating content on sobriety for 8 years now since I kind of started the journey. It's got me people who followed me. And I think what happens is that, people in the publishing houses start looking at what trends are and they go, actually, this sobriety thing is a growing trend. We've got more people talking about it, more people doing it. And then a publishing house reached out to me and said, do you want to write a book? And I was like, yeah, I do want to write a book. And this is what I write it about. And they're like, great, that's what we're thinking. So did the contracts, started writing. And yeah, it was kind of really getting the balance in there of like the story of like what I've been through and the benefits of sobriety to help people make a choice. And that choice is 2 parts. It's those who don't realize they need to make a choice. And it's those who want to make a choice. And they're very different audiences. Yeah. So you've got the high achievers who are looking for life hacks. And I think it's the ultimate life hack. And then you've got people who need to stop and don't realize they need to stop.
Yeah. I didn't drink for 5 months last year. And I can just say, immeasurably every area of my life got better during those 5 months. So I can certainly see that. But from an entrepreneur's perspective, going from, operator, thick of it, social chain, growing this massive, then actually sitting and writing, like how did you actually find that process of like, all right, now I'm going to sit down and get all of these things that I know, all this knowledge, all this wisdom actually on paper?
I think I couldn't have done it without social chain. I think what exiting the business taught me was like a bit more balance and time. I think this is also like where COVID was beautiful because from 2013, all I'd ever known was a laptop every day, 8 till 8 working, and having people come to my desk. And I was in the office every single day, people coming over to me, be it junior, senior, asking me questions, asking for help, asking for support. And like my role was like, obviously like to execute on like the strategy and stuff, but like day-to-day firefight. What you get with agency work and what you get with kind of like the founders is like you are the beacon of knowledge that's been there since day one. So like your firefighting is constant. Everyone wants your opinions on things, yeah? They want your view, they want your opinions. So what happened with COVID was those ad hoc like water cooler moments and like people coming to my desk never happened because like the idea of putting a calling to speak to your founder about thought or a feeling.
Right.
So like my like days suddenly like freed up and like once we figured out like the cash flow, the business, the clients, that side of things, like my day was like management meetings, getting reported to rather than being asked for like help. I was already on the path of like exiting the business at that point. I kind of started the discussions around selling my shares pre-COVID and all that kind of stuff had already started. So like it was like escaping out the back door a little bit. I almost had like a year off then, like from like leaving in like the June to like Fearless, like starting in the October the year afterwards. I had like a year off of like COVID and fitness and like stopping. So that taught me, I think, reflect and take time. So it kind of led me to be able to stop and then sit down and have like start writing. And I did start writing previously. So like during that year, I did start to write some notes down and some feelings and some thoughts. So there was like base material there.
Nice.
And then I just found some time, mainly on airplanes, surprisingly. To finish it off.
Yeah, it's so interesting because I can't imagine what the exit year during COVID is like. I exited real sport 2018, and it was like that year. It was just like you couldn't keep me in the house, right? So it's such a different experience. Probably a much better one in terms of avoiding a lot of the sort of post-exit founder impact that often is felt by people. Maybe in the sort of safety of COVID in many ways, that inverted commas a safety.
Yeah, it was crazy. So like I got rid of everything. I got rid of my house, my car, all my direct debits because I didn't need anything. Yeah, it was a very strange period. And I think it was quite nice to have everything, but not be able to do anything. Because then you weren't stupid.
Yeah, exactly. Well, this is it, right? I can imagine COVID being upside there in terms of being able to keep the reins on a little bit.
Yeah, and you got bored quickly. So you had to start a new business.
Yeah, exactly. Fascinating. Okay, well, one last question that I've got for you is, especially with your thesis in mind, you're looking for early stage founders who have built a good business, which is fundamentally revenue is the top layer and everything's downstream from that. We have sales, we have clear market demand, people are buying our product. What's your advice to founders who are saying, how do I achieve that first bit of revenue? How do I go and do this? Because for a lot of young founders who came up in 2014, 15, when it was like, sales is a dirty word, how, and you'll remember that time, right? How do you educate a young founder now to say, right, go and hunt down this revenue and make that the starting point of your business?
It's the whole kind of idea of, getting 5 to 10 people on a beta, getting paid for it, getting them feedback, make them feel special and, help grow it with them in mind. I'd say that model's not changed, but I think now it's like a real question of commerciality. The biggest shift for me is that a profit is not become a dirty word. It's become actually like a real reality.
Mm-hmm.
I've spoken to founders who have purposely made a loss so they don't get valued on a revenue and like that's a good thing because the adjustment of valuations that happened previously, you were marked down for making profit because you were like, oh, this business is now a 10 times EBIT business rather than a 10 times revenue business. Great. That's stupid. It's stupid. It's absolutely delusional. So from my perspective, I think that if you can show good fiscal management as a business and a founder, it makes huge potential for you in the future.
Fantastic. We do 5 questions that we ask every guest, sort of not quick fire or anything. We'll do them very, very quickly. But the first question is, how do you define success?
I think just like feeling fulfilled, feeling like you've just done a good 5K run or feeling like you've just, got happy, like place in your relationships. So feeling like a sense of fulfillment is probably success.
Nice. Okay. Fantastic. All right. The second one is, what's the thing you're proudest of?
Oh, being sober for 8 years. Yeah, that's number one.
That's a pretty good one. Yeah, I can imagine. Okay. Question number 3 is there anything in your journey that you regret?
No, I'm very much in the mindset if you're happy right now, then you can't look back and like try and change something because it makes you who you are and where you are today. No, I'm happy right now, so there's nothing I regret.
Okay, I love that. All right, my 4th question for you is, now as a successful ex-entrepreneur, lots of exciting things going on, is there anything that still causes you sleepless nights?
No. Everything is a problem which can be solved.
Love that. Very stoic. Okay. Yeah. Dom, my last one for you today is 15-year-old Dom walks in the room right now. What are you going to tell him?
It's all going to be good. Like, I think as a 15-year-old, I was very much like unaware of the world. And I think I lived a really pure upbringing. Mm-hmm. Like no anxiety, no problems, just embrace like the here and now, love sport, love my friends. So like, although I get really excited by seeing like 16-year-old entrepreneurs, I feel like living is important. And like I didn't start my entrepreneurial journey until 19. I didn't have any idea about business. I wasn't the kid at school selling sweets. Yeah, it comes at all different places for people. And like, even though I, wasn't entrepreneurial at 18, I was entrepreneurial at 19. So enjoy life, enjoy growing up.
Nice. Very, very wholesome. We get a whole range on that question. So a nice wholesome one.
What's the craziest one you had?
Oh, we've had some really dark ones, but like I had one, I guess, I think who, I think they got shot or something like that. And it was like, just be careful, don't go on the tube on this day. And it was like, it ended up the whole range, That was a very wholesome, nice one.
Yeah. Well, it's funny because I look back at like the worst things that ever happened to me. And I'm like, I would never regret the pain that put me through drinking to get me where I am today.
Right.
It's defined me. So like, I wouldn't say to 15-year-old Dom, stop drinking. I'd say to 15-year-old Dom, drink as much as you can, as quick as you can, and figure out you've got a problem.
Yeah.
You've got to go through it.
It's interesting. So we did a show with a guy called Simon Cusden, really good friend, ex-England cricketer, really, really good guy. And he is now, I think, 7 years sober. And that's what his whole, his advice to everyone is, you got to go through it, right? You've got to hit that point. So keep going until you hit that point, and then that's how you come through the other side. Which is, he always says, it seems like counterintuitive advice, but actually, if you've gone through it, that's the reality.
You know it. You've got to go through it, and you got to learn. And I'm better for going through it than I am not going through it.
There you go. Amazing, Dom. Where can people find you if you want to be found?
LinkedIn, Instagram. I'm pretty responsive on all of them.
Amazing. All right. Well, we're going to put all your links below. Dom, thanks again. You're a legend. Really appreciate you coming on the show.
No problem. Thanks for having me.